Ladies and gentlemen, the first big tech stock of this earnings season has officially reported on earnings. The stock is trading slightly higher here in after hours, up about 2% on the day today. Let's discuss these results, what they mean for the markets going ahead. Now, I want you guys to keep in mind, you don't really know how Wall Street is going to take earnings until the conference call. The conference call tends to really send it home in a good way or a bad way. So unfortunately, you really won't know until at least the conference call, which this is being recorded around the time the conference call is starting. But even more so into tomorrow, we've seen many times before where a stock is up a lot and sells off the next day following their earnings report, or a stock doesn't really do anything and then it rallies throughout the next day. We really have to see what happens, but I have all of the numbers that you need to know and my opinion on what this actually means for the markets. Now, I wouldn't say this is a disappointment by any stretch of the imagination, but it's not super impressive either. Now, Netflix was already trading pretty much at an all-time high heading into this report, so it doesn't surprise me that the stock's not moving up that much, even though the numbers are pretty good. Netflix Q3 2024 earnings. You have EPS of $5.40 per share. The estimate was $5.12. So they beat on EPS. They also beat on revenue. Revenue came in at $9.82 billion. The estimate was $9.78 billion. So beat there as well. Streaming paid net change, it's 690,000. The estimate was 696,000, so a little bit of a miss there. Streaming paid net change, this is the subscriber number, came in at positive 5.07 million. The estimate was positive 4.52 million. So they did beat on subscribers by about 500,000 or so, which is, again, that's good. For sure, they beat the estimates, but how good is it? Does it justify the stock being at all-time highs and up 90% in the past year? Let me know down below in the comment section. You have APAC streaming paid net change, 2.28 million, estimate 1.56 million, so a handsome beat there. Streaming paid memberships, 282.72 million versus the estimate of 281.92 million. So they beat there by less than a million, about 800,000 or so. Again, is that good? Yes. Is that good enough? That is the question. I don't know. It feels like it's not good enough to justify the run that Netflix has had and the valuation that Netflix does have. Is it bad? Again, absolutely not. Does it justify it? That's up in the air. Netflix sees Q4 revenue, $10.13 billion, estimate $10.05 billion, so they did guide up higher than estimates. Sees Q4 EPS, $4.23 versus the estimate of $3.90, so that's a nice 10% guide up or so. Sees full year revenue, positive 15%, saw 14 to 15%, so on the higher end of their own range. The estimate was 14.9%, so in line with the estimate, not really a huge surprise there. Netflix sees full year operating margin at 27%. They previously saw 26%. The estimate was 25.9%. Netflix sees full year operating margin at 27%. They previously saw 26%. The Wall Street estimate was 25.9%. They see full year free cash flow, $6 billion to $6.5 billion. They previously saw $6.8 billion. So that was kind of a guide down on free cash flow. The estimate was $6.38 billion. So they were kind of right in the middle of the estimate on Wall Street. They see full year 2025 operating margin 28% versus the estimate of 27.9%. So that came right at about expectations. Sees full year 2025 revenue of 43 to 44 billion. The estimate was 43.4 billion. So again, kind of right in the middle of the estimate. So again, were these good earnings? Yes, but they were really just in line with expectations, broadly speaking. I don't know if that's enough to get the stock really excited. And I don't think it's enough to confirm whether or not, markets are going to go higher from here. Be it Netflix is typically the first big tech earnings that kind of raises or lowers expectations across the board. If the rest of earnings season plays out like Netflix, then typically when you just meet expectations, you tend to get a sell-off. Just meeting expectations, if that's what we can expect this earnings season, is not going to be enough to really push us higher in any kind of meaningful way. Now, I know I'm just looking at Netflix here, kind of extrapolating what we could see for the rest of big tech earnings season, but you really need big tech at this point, if you are a bull, to come through and impress investors. If you don't get impressive earnings, not just good earnings, but impressive earnings, it's probably not going to be enough to take this market higher in the near term. Market on close imbalance today for the S&P 500 was negative 1.2 billion, NASDAQ 100 negative 1 billion, Dow 30 negative 530 million, and the Mag 7 was negative 385 million. So in the last 10 minutes of the trading day, the imbalance was negative. There was more sell orders than buy orders coming in to close out the trading day today. Now, I just want to reiterate again, I've said this multiple times in a row, but it really depends on the specifics laid out in the conference call, the confidence, the tone, what we hear about new innovation and new products, things of that nature is really what's going to dictate whether or not Netflix does have a good day tomorrow or a bad day tomorrow. I still think, before we get to tomorrow morning, you don't want to count Netflix out, nor do you want to be betting for Netflix at this point. It's still very much up in the air with a report like what we just got. Plus, you're also going to have the analysts that come out and give their thoughts, give their takes, give new price targets, things of that nature, and then start to make new calls for Apple, Google, Amazon, Nvidia, Tesla, the whole likes that will also be reporting here in the next couple of weeks. So in short, was it good? Yes. Was it good enough to push the stock higher, to propel the markets higher? Maybe not. You can see in after hours, the S&P is barely up. It was kind of a flat day overall today, and these earnings are really not changing that. I will point out, though, you did see Nvidia kind of sell off throughout the trading day today. You started off, you hit a new all-time high, and then you kind of just sold off into the close. Now, I do think in regards to Netflix, anything can happen. We've seen this a lot of the time. A stock will rally after the results come out, or a stock will fall after the results come out. And then the next day, things totally change. So don't draw any conclusions, good or bad really at this point. But whichever direction this thing does take heading into tomorrow and throughout the trading day tomorrow is really going to dictate what happens to the broader markets. If Netflix is bad, then the markets are going to be bad. If Netflix is seen as good and the stock goes higher, then the markets are likely going to go higher, because something that is not really being talked about too much right now is you have the S&P 500, right? You have your Mag 7, which accounts for most of the market weighting, or at least a good chunk of the market weighting in the S&P. The Mag 7 is expected to grow earnings this quarter on a year-over-year basis, but the 493 other stocks in the S&P 500 are not. Okay, next quarter we're expecting there to be growth there in the 493, but not for this quarter. Now, to a certain extent, next quarter and really even next year is more important for companies. Whatever their guidance is for the fiscal year and for the next year, we'll start to get some 2025 guidances out there. That's really going to affect how the markets trade overall. It will either lower or raise EPS estimates for 2025. As you guys know, for the past couple of weeks, earnings estimates for 2025 on the S&P 500 have been basically plummeting, which is kind of strange that markets are sitting near all-time highs, actually hit an all-time high today, and earnings estimates are plummeting for the next 12 months ahead. Typically, if earnings estimates fall, the markets fall. Especially, longer term EPS estimates like 2025. If EPS estimates rise, typically that's when the markets rise. But right now you're seeing estimates fall, and markets have been rising. So overall, we could be vulnerable for a larger pullback in markets. Now, as I reported yesterday, you did have Fundstrat issue a rare warning for a correction that could be coming from now into mid-November. Fundstrat's actually calling for a 3.5% to almost 9% correction in the NASDAQ, which could similarly translate into the S&P 500 as well. Now, it is being reported today from Biden. He says, I will be speaking soon with Israel's Netanyahu to discuss bringing hostages home and ending the war. But it was reported earlier in the trading day today that there's still going to be some kind of retaliation attack on Iran. We're just really not going to know when. This is probably going to come at the least most expected moment, considering we thought this would have already happened by now. And unfortunately, it could catch the markets off guard when it happens. It could be a negative event. It could be seen as a positive event if it's a kind of exhale moment and we don't expect any further kind of retaliation or larger geopolitical conflicts. Depends what Israel strikes, how they do it, how large it is, and those details we just don't know at this point. So these geopolitical tensions are still just hanging over the markets. Now, tonight at about 7:30 p.m., we are going to get the inflation rate out of Japan. Now, think back to August 5th, the flash crash that we had in markets via the Japanese carry trade basically imploding. Now, it gets worse as the Fed cuts rates and the Japanese central bank raises rates, because that's what they're doing right now. If inflation comes in on the higher side, then that potentially actually could be good news. If the Japanese inflation rate does come in on the low side, then that may prompt the Japanese central bank to, potentially raise rates even more. We'll have to see. Japan really just wants to make sure they can be at 2% inflation because they've struggled with deflation for so long. So Japan actually wants to see some inflation right now. But as these dynamics play out, it wouldn't surprise me if we did see more of that Japanese carry trade become an issue via some of the inflation numbers out of Japan. Wouldn't surprise me if that happens, but not something I'm really expecting at the same time. 10 o'clock tonight, Eastern Standard Time, we are going to get the GDP growth rate, industrial production, fixed asset investment, and retail sales, as well as GDP growth rate quarter over quarter, and the unemployment rate coming out from China. We're not really expecting to see any material strength in these numbers. We are expecting retail sales to go up. We are expecting the GDP growth rate to be at 1% quarter over quarter, expecting the unemployment rate will stay about the same. So we're not really expecting these stimulus measures are really going to have any measurable impact right now on China's economy. But if these numbers come in good, Wall Street is going to take that as good news. Okay, Chinese stocks are going to have a good day, essentially, tomorrow. If not, we're going to have a bad day if those numbers come out bad. Now, tomorrow morning, we are going to get building permits, preliminary numbers for September, expecting 1.46 million. That data comes out at 8:30 in the morning tomorrow. Usually that's not a big catalyst, although the more building permits, presumably the more building that will be getting done, so the higher the better there. You will get housing starts for September, expecting 1.35 million, and housing starts month over month, expecting a positive 1.8%, after last month was positive 9.6%. So the more positive there, the better. You will get Fed Bostic, Fed Kashkari, Fed Waller, and Fed Bostic again between 9:30 in the morning and about 12:30 in the afternoon tomorrow. So going to be a lot of Fed commentary, and we'll see if they, continue to stick with the kind of same narrative, the slow and steady, we're not in a rush to cut rates, or if they start to be a little bit more defensive and say, maybe we should think about a pause. Some of that language that has been thrown out from different Fed officials. We really want to see what the narrative becomes. That will probably have an impact on Treasury yields coming tomorrow. You did see that Treasury yields were higher today by quite a bit, following the better than expected initial jobless claims and better than expected retail sales, which did weigh on the Russell 2000. It did weigh on your average stocks. You can see the percent of stocks trading above their 50-day moving average fell about 3% today, down to 67%. So it wasn't a terrible day, but it wasn't a great day by any stretch of the imagination. It was a bad day. You did see 3% of all stocks fall below their 50-day moving average. So could have been worse, of course, but definitely was not great at the same time. Now, you also have the CNN Fear and Greed Index sitting at 72, which yesterday it was at 69. And it actually just recently hit 75. So you still have a lot of bullishness out there in the markets. And we'll see with Netflix earnings how that kind of sets the tone heading into next week when we get more of your big tech names. Now, I do think for Tesla stock, it's also very simple in regards to what's coming next. If the markets fall, Tesla's going to fall. If the markets rally, Tesla's going to rally. I do think if the markets can continue to hold up this strength and the markets do rally from here, that at some point Tesla's going to really start to outperform as the markets get ready for the Model 2, the cheaper price Tesla event, presumably that could be coming by the end of this year, at least the event itself and the launch of that product. Maybe Q1 of 2025. Again, the longer the markets stick with the soft landing narrative, I do believe inevitably that means Tesla stock needs to start benefiting from that. Tesla is one of those stocks that will benefit the most from a soft landing or, be hurt the most with a potential hard landing. And if Wall Street's dead set on a soft landing, like they have been recently, at some point that will start to positively affect Tesla, and I think Tesla will begin to outperform. So let me know what you think about all of this information down below in the comment section. Let me know what you think about Netflix earnings as well down below. You guys have a safe rest of your day, and I will see you in the next one.